So I think it's really important that people look deeper, because I think sometimes what I see is they say, well, you have 100 million, tax is 40 million, you're 60 million ahead. Your kids are going to get 60 million. I think that's actually very misleading for most clients. Maybe you can discuss that, because I think most software that I've seen calculate the tax simply says, here's your gross value, here's the exemption, here's the tax. That's what your kids will get. Mm-hmm. Is that really true?
No, absolutely not. I mean, we're sitting here looking at a Celtics jersey and thinking about these big sports teams that have to...
Our office has a lot of jerseys, by the way.
Yes,
so people might be wondering.
We have a fair amount of memorabilia, but the Celtics example is actually very relevant because the team was just recently sold because the family knows they're going to need liquidity. And so now they sold it at a profit, they paid their taxes on it, but they don't get to keep the team that they wanted to keep because they needed to raise liquidity. And they at least got out in front of it and sold the team when the value was at its peak, knowing that they're going to need this liquidity in the future. So they were able to manage the timing of that sale, but they still ended up having to sell that asset.